Jai Hind everyone. Welcome to my YouTube channel, which is Explore Yourselves, Banking and General Knowledge, etc. Today I am going to describe about RBI's new deposit interest rate rules from October 1, 2026, a major step towards transparency and fairness in banking. Introductions. The Reserve Bank of India has introduced significant changes to the rules governing bank deposit interest rates, which will come into effect from October 1st, 2026. Through the Reserve Bank of India, commercial banks, interest rates on deposits, Second Amendment Directions 2026, the central bank aims to bring greater transparency, fairness, and consistency to the way banks offer interest rates on deposits. These revised directions have been issued not only for commercial banks but also for small finance banks, regional rural banks, payment banks, local area banks, and urban cooperative banks, ensuring that the new framework is applicable across India's banking system. Although the changes mainly affect bulk deposits of rupees 3 crore and above, they also reinforce important principles that benefit the overall banking ecosystem. Understanding bulk deposits. A bulk deposit refers to a single fixed deposit of rupees 3 crore or more. Such deposits are generally made by large corporates, business houses, trusts, institutions, government organizations, and high net worth individuals rather than ordinary retail customers. Traditionally, banks often negotiated interest rates privately with these large depositors. As a result, two customers depositing the same amount on the same day could receive different interest rates depending on their relationship with the bank or their bargaining power. This lack of transparency sometimes created an uneven playing field, which the RBI has now decided to address. Daily publication of bulk deposits interest rates. One of the most important changes is the mandatory daily publications of bulk deposit interest rates. From October 1, 2026, every bank must display its applicable bulk deposit interest rates on its official website by 10 a.m. on every business day, with a maximum grace period until 10:10 a.m. This means that the interest rate available for any bulk deposits will be publicly visible before customers place their deposits. Banks will no longer be permitted to quote privately negotiated rates that differs from those displayed on their websites. These measures significantly enhances transparency and allows customers to make informed decisions while ensuring that competitors and regulators can easily verify the rates being offered. Equal interest rates for similar deposits. Another major reform introduced by the RBI is the principle of equal treatment. Banks must now offer the same interest rates to all customers placing the same amount on the same date, irrespective of the branch, customer's profile, or relationship with the bank. Whether the depositor is an existing corporate client, a new institutional customer, or a high net worth individual, identical deposits must receive identical interest rates. This effectively ends the practice of preferential pricing and private negotiations that previously favored selected customers. The new rule promotes fairness and strengthens customer confidence in the banking system. Greater flexibility through risk-based pricing. While the RBI has tightened transparency norms, it has also provided banks with greater operational flexibility. Under the Global Liquidity Coverage Ratio (LCR) framework, different categories of deposits carry different levels of withdrawal risk. Retail deposits are generally considered stable because individuals tend to keep their fixed deposits until maturity. On the other hand, large corporate deposits may be withdrawn quickly if companies require funds for business operations. Recognizing this difference, the RBI has now allowed banks to offer higher interest rates for deposits carrying higher withdrawal risk, also known as higher run-off rates under the LCR framework. This applies to eligible domestic bulk deposits as well as certain large non-resident deposits. By aligning deposits pricings with actual liquidity risks, banks can manage their resources more efficiently while maintaining financial stability. Who will benefit? The primary beneficiaries of these reforms are corporates, institutional investors, treasury departments, trusts, and the high net worth individuals placing bulk fixed deposits of rupees 3 crore or more. They will now enjoy complete transparency, equal treatment, and confidence that every eligible depositor receives the same publicly disclosed interest rates. Banks will also benefit by adopting risk-based pricing that better reflects the cost of managing different categories of deposits. Although retail customers depositing less than 3 crore are not directly covered by the bulk deposit provisions, they indirectly benefit because the RBI has reinforced the principle that banks must offer only those rates that are publicly disclosed. This improves trust and transparency across the banking sector. Why RBI has introduced these changes? The RBI has stated that these amendments are the result of a comprehensive review of the existing deposit interest rate framework. The objective is to improve transparency, strengthen disclosure standards, eliminate discriminatory pricing practices, and promote fair competition among banks. By requiring publicly available time-stamped interest rates and prohibiting differential pricing for identical deposits, the RBI is moving India's banking system closer to globally accepted standards of transparency and market discipline. At the same time, allowing risk-based pricing under the liquidity coverage ratio framework supports better liquidity management and contributes to the long-term stability of the financial system. What should large depositors do? Businesses, institutions, and individuals planning to place fixed deposits of Rs 3 crore or more after October 1, 2026 should check their bank's official website every business morning after 10 a.m. to verify the published bulk deposit interest rates before investing. They should ensure that the rate quoted by the bank exactly matches the published rate. If any bank offers a rate different from the publicly disclosed rate for the same deposit amount and rate, customers may raise the matter with the bank and, if necessary, approach the RBI's grievance redressal mechanism in accordance with the applicable regulations. Conclusions. The RBI's latest amendment marks a significant milestone in making India's banking system more transparent, equitable, and customer friendly. By mandating daily publications of bulk deposit rates, ensuring uniform interest rates for identical deposits, and permitting risk-based pricing under the liquidity coverage ratio framework, the central bank has created a more transparent and efficient environment for large depositors while strengthening overall financial stability. Although retail depositors may not experience immediate changes in their fixed deposit rates, these reforms reinforce confidence in the banking system and demonstrate the RBI's continued commitment to fairness, accountability, and sound banking practices. Disclaimer: this article is intended solely for educational and informational purposes based on the RBI's announced amendments regarding deposit interest rates regulations. The information presented should not be constituted as financial, investment, legal, or tax advice. Deposit rates, banking policies, and regulatory guidelines may change from time to time. Readers are advised to verify the latest RBI notifications and consult their respective banks or qualified financial advisors before making any investment or financial decisions. Thank you very much for your patience. Request for like, subscribe, and share.